All right. Hi, everyone. Thank you for joining us today for our joint webinar titled Risk, How to Assess and Manage It. Today, we'll be discussing how a risk assessment is conducted and how a risk management strategy should be developed. And I'll pass it over to our speakers for some introductions.
Hey, thanks, Melissa. First off, thank you to everybody that's joined and welcome to our discussion today. First off, my name is Guy Thompson. I'm a digital forensics and incident response analyst on our Critical Start's cyber incident response team. Today, I'm joined with a team member, senior forensic engineer, Chad Graham. Chad, do you want to kind of give us a little bit about yourself?
Yeah, as Guy said, I'm the senior forensic engineer on the cyber incident response team here at Critical Start. I have about 12 or so years of incident response experience, which also includes holistic cybersecurity program evaluations and risk assessments, things of that sort. And then also today we're joined by some co-panelists here.
Sure. Our special guest speakers today are going to be Jake Sheehan, Chief Financial Officer at Twin Cities Group, and Cindy Anderson, the Director of Risk Management at Twin City Insurance Group. Today we're going to cover risk strategy, and I think it's important that we begin kind of discussing what the risk strategy involves. And you begin with a risk assessment. How do you assess risk? Then once it can be assessed, then you develop a strategy. And then once you develop the strategy, how do you manage and maintain it? I guess, Jake, do you want to kind of jump in here and kind of give us a little bit about yourself and talk to us about how you would do a risk assessment?
Yeah, absolutely. My name is Jake Sheehan, the CFO at Twin City Group and also insurance advisor. So, I work with finances and, I'm out there hunting for new clients to provide them with insurance. We're an independent agency. We've been in business for 109 years now. I'm a fourth generation owner as well. And our focus is commercial insurance. Anything, cyber is a specialty of mine, but we also do your general liability, your property, professional liability, employment practices liability, workers' comp, just about any other insurance piece that would go into any business, and some other kinds of things like IP and patent insurance and all that. We work with industries like manufacturing, healthcare, retail, financial services, professional services, warehousing, logistics, real estate, pretty much the whole gamut there. And what we really focus on is the risk management piece, beyond just the buying the insurance policy, and to come up with ways to really get into a company, look at what they're doing and figure out how we can improve that. And just as much as I'm selling insurance to individuals, I also am selling to my carriers to position that client in the best possible light, to make them be like, I want to work with that company. So that's a little bit about what we do there. And I'll pass it off here to Cindy, and she can give a little information about who she is and what she does with us.
Hi, again, my name is Cindy Anderson, and I am the Risk Management Director at Twin City Group Agency. I come with 15 plus years of experience in claims and risk management with a large carrier. And my role here at Twin City Group is to really work with our clients to build their risk management portfolio, to reduce losses. That's our main goal. And then to make sure that at renewal time, they shine in front of underwriting, so they have several options going forward with their insurance decisions. And we do risk assessments, we do service planning, and then also provide them with the resources that will bring them the most value throughout the year.
That's great. To kind of speak to that end, Cindy, where do you start? Say a company approaches you and, they're seeking perhaps cyber insurance or they need a risk assessment. What's step one?
Right. So one of the first things we do either with a current client or a prospective client is we do a quantifiable risk assessment, which usually is anywhere between, 12 to 15 questions, really focusing on and benchmarking them on where they are at with their peers from a risk management standpoint. So at the end of the assessment, they get a number on where they stand. So we really get to dig into the policies and procedures that they already have in place, or the things that maybe they are lacking, or where there's some exposure gaps that we can then work with them on to get that score up and to just make it a better, more solid company.
Said essentially that we start off with a benchmark. So this is where we are, this is where we started with nothing in there. Now we've identified, with our assessments, you'll get a score of 100. So you're at an 80. Well, let's try and get that up to 90, 100, try and get it up to a higher level. And through that, in the marketing process, we can show the actual improvement of here they are, they're doing great. These are some areas that we found that we want to expand on and put those all in place before the renewal.
Are there any aspects of this risk assessment that are qualitative instead of quantitative, or do you guys strictly focus on a quantitative assessment?
It's more, I'd say, quantitative at this point, but I mean, we use the information to build on what they're already doing.
Mhm.
And in hopes that it does in the long run reduce their exposures. And then also we usually present these assessments to underwriters, and the positive feedback we got from them is really good.
Great.
I guess kind of the next question is, what does that questionnaire look like? What sort of questions could be involved, and what benchmarks are you looking to achieve?
Yeah, I mean, I have one right in front of me, which focuses on cyber. And, I can read you just a couple of the questions. I mean, they ask, what kind of multi-factor authentication you have in place. Basically, these assessments are written by very experienced cyber people. And I think they, for a lot of us, this is completely over our heads. So it's meant to kind of bring it so we all understand. But the questions are based on trends in the marketplace, and things that people, that the claims and the companies are seeing as trends. Another question might be, do you train your employees on phishing? Give yourself a score from a 1 to 10. What does your backup plan look like? A variety of questions. This particular assessment has about 20 questions, and it really focuses on cyber.
We'll use that as a base and then kind of build off it, because then there's going to be a lot of technical things within there. But it's a really great starting point. And then depending on the type of company, the size, everything they got going on, an application is going to kind of fill through some of the other pieces. We have different scans that we can do that are external scans that are going to identify open ports, possible open domains, things like that. It's external, it's not all encompassing, but it'll identify some things. And again, we'll give a score of 100. So that's going to be on the technical stuff pieces rather than the risk management.
Yeah, and the risk assessment is meant to be, open up the conversation. I like to sit down with our clients and face to face have ask these questions, get their answers and get a deeper dive into what exactly they're doing. And you'd be surprised at, even things that they weren't aware of or things that they were doing that they were aware of that are really helping. But it really is a conversation versus a checklist or a quiz.
Yeah, or an audit or, yeah.
Correct.
Okay. You mentioned something, Jake, about industry verticals. So is there, depending on industry vertical or company size or company exposure, does that change how you perform these risk assessments or how you score these people?
It certainly can change as you get bigger. A lot of the premiums are going to be based off of the industry that it's in, the amount of records that they have, and revenue. And as you get into those higher pieces of revenue and you got a lot more risk going, some things that may have been recommendations are now going to be requirements.
Okay.
Ideally we want everybody to have MFA, but if it's a 20-person company, there's some carriers out there that will take it on. Or if you got a 1,000-person employee company and they're not doing any cyber training, well, that might throw them out of the contention if they're over 100 million, or just that can change. And then also the industries. One industry that's really tough right now in the cyber market is law firms. Not a lot of people are writing those. People got burned, and then with the data breach side and the cyber ransomware and things like that, that's one area that's taken a hit. Again, also with your healthcare, you got HIPAA compliance. Then if you're using merchant processing, PCI compliance, and then some people maybe have a CAN spam exposure. I have a company that works financial services and debt collection, and so they have certain things that they can't, they have to go by, and that'll tie into their cyber policy.
Awesome.
Yeah. So how do you conduct a risk assessment, and how frequent would a company do a risk assessment?
We like to do, personally, I think it kind of depends on their trends and the exposures and the size of the company. And something we do here at Twin City Group is we do track claim trends and different trends within their company and externally. And if we feel like it's going to add some value and there are some, changes in the way that they could manage that risk, then, certainly on an annual basis, it's something to revisit. I'm not sure we would go into, a deep dive that often because usually things don't change. But we certainly do stay connected outside of the risk assessment with we call it a service plan, and that's how we benchmark the things that we need to accomplish throughout the year, and at the end of the year we are able to look back and say we did this and this and here's the results.
Well, and to piggyback off that, what we'll also do is if there's any major change within the company, maybe they're purchasing another company, maybe they're opening a new office, or they're having a big technology change where they're, either going from servers to the cloud, or it could be any number of things. When there's a major change, we want to kind of look at that and then, also be ahead of that too on, well, what's this going to look like for what we have in place and what do we have to change to accommodate where the company's going.
Okay. You mentioned something there that also piqued my interest quite a bit. So you talked about any major changes and things like that, or maybe they're acquiring another company. So if a company you have already insured does go through a merger and acquisition where they're acquiring a different company, do you have to do a completely new risk assessment on the new company they're bringing in?
I would say ideally, we'd like to kind of take the two of them together and look at them separately and then look at how they're going to be combined
Mhm.
and figure out, some of the stuff from what we had in place for the previous company may not be applicable to the new way. And so we want to look at them separately and then figure out how that's going to work together.
And then as far as big changes go, how did COVID and the move to a mostly fully remote workforce for a lot of companies change your assessment of risk? Now instead of customers being in controlled environment, or clients being in controlled environments, they're now, everybody's working from home or working from a coffee shop over a VPN. Did that change how you guys view risk and how you underwrite and do all these types of things?
I would say to a certain degree, with everybody working from home and a lot of people not being prepared for that, they may not have had the right procedures and policies in place. There was also maybe a lack of knowledge and understanding. Now I have this laptop, I shouldn't be doing work at a Starbucks on an open Wi-Fi. And so there's an education component of it too. So not necessarily too much changed. It's just a little bit more of a focus on where things become priorities, because that we have a bunch of people on their own devices, whether it's their own device or it's a company device, that just opens up the door to other ways that people can get in.
Yeah, I would agree with that. Two of the major best practices for cybersecurity are phishing training and remote desk protocol, which is basically facilitates when people are working remotely on laptops, etc. So that's just one of the several best practices. Phishing claims being still 58% of all cyber claims. So that's really probably the main focus at this point, based on data.
Yeah, there's so much of these data breaches, hack attacks, ransomware. A lot of it, I think what I saw the other day was like 98% of hack attacks are caused by employee error. So you can have the best and greatest systems in the world, but at the end of the day, you're only as strong as your weakest link, which is going to be your employees. And the employee training and the phishing campaigns, where it can be through a separate vendor or your IT company where they send out spoof emails. And then if somebody clicks on it, there's this one vendor that we work with where you click on it, then you get like a little 2 or 3 minute punishment video that's all animated and tells you what you did wrong and why you did it. And so then, whoever is sort of managing that, they can kind of see who's opening what and what they're doing. And one of the things that I didn't really realize at first is, for a company, when they implement that, they want to tell them that those emails are going to be coming, that they've set these up as spoof emails, which kind of seems counterintuitive, but it also gives them that mental thing that, oh, I don't want to be the one that clicks on it, so they're kind of prepared and they're looking at these things and being able to have a function within your email to report suspicious activity and phishing, so that it'll get flagged and it'll go to the IT and IT will see it. Sometimes things get flagged that shouldn't be flagged. I've had that happen in the office here a few times, but it's always better to be more careful.
Exactly. Better safe than sorry.
Yes.
Sure. How can companies use kind of the risk management strategy to develop an incident response plan if they don't already have one? And what role does the IR plan sort of play in the encompassing strat in general?
Yeah, so that's another probably top 5 best practice for cybersecurity risk management, and that's something that here at Twin City Group we help them to prepare that. It's really important for most carriers that the insured has one of those implemented. So we make sure that they do and that they understand it. Really the primary focus on that is that they have a plan if something were to happen, and they know who to call and what lawyers to call. And most carriers, as Jake kind of alluded to earlier, besides providing the coverage, they provide a lot of resources. So a lot of these carriers will provide 1-800 numbers that you can call immediately and actually get a cyber expert on the phone. And they also, provide, phishing, like Jake said, different trainings that at discounts or sometimes for free. So there's a lot of benefits that come with the coverage. But the incident response plan is something that we actually help them put together here at our agency.
That's awesome.
Yeah. With you, Cindy, you mentioned like kind of top 5, and you mentioned phishing training, which is great. A lot of companies can do that. And an IR plan. Can you flesh out the other 3 in the top 5?
Yep. So you have the MFA and phishing training, and those are probably the top 2. And then you have the they call it the endpoint detection and response. And again, that's getting a little more technical, but your service provider or your IT person is going to know what that means. Along with the remote desk protocol. And then just that strong backup procedures. They always I think they say it's like 3, 2, 1. You want 2 offsite, 1 in the cloud, 3 total. So just those standards, and now I could go on and on, but there's quite a few, but those are probably the top ones that we are seeing in the industry that both carriers want and that are also seem to be the most, bringing the most value.
Awesome. Do you feel like it makes a difference if you were to evaluate a company and not only did they have an EDR solution, but they had a managed service provider, or like for instance, Critical Start's a managed detection and response, and we manage the EDR. Does that help push things forward a little bit quicker, or does it play a role at all?
Yeah, I think I know what you're asking. I think, a lot of our insureds have a vendor who are doing those things for them. And there are insureds that already have that in place, and that does help. It's just, making sure that it's being implemented and they understand, the importance of it.
I think anytime you bring out, you have a outside vendor that's providing a specific service, that's always going to help, because they don't necessarily want to see people are handling and doing these things internally. Because I mean, if you're a big company, you can do some of these things, but even the big companies are outsourcing some of these things because it's beyond their control, and it's just not worth their time, money, and energy. They want to focus on what they do best and pass off and pay for a service where you can have these things taken care of. So they're on the applications, they'll ask about various vendors and services they use, or different security components of it. Blanking on the one question that was specific on some of the endpoint detection stuff, but as the company's larger, more sophisticated, they're going to want to see more and more controls and things in place from reputable companies.
I thought it was interesting as I was preparing a little bit for this. 65% of claims are affecting businesses with 500 million or less in revenue. So they're really starting to go after these smaller companies. And I think that's why a lot of this risk management that we can offer them is probably something they don't have internally. They may have one IT person that knows their stuff, but they're not as sophisticated as a larger company. So they may have a vendor, but there may be a disconnect. They probably don't know what an IPR is. IRP, incident response plan. So that's really, I think, where the niche is, and where we see a lot of gaps and are able to bring that value.
This is kind of on a side note here, but I think one of the big things is people need to kind of understand the perception and who these people are on the other end. You know, it's not some kid in his basement, you know, with a hoodie on the computer, cracking away like in the movie Hackers and stuff like this. These are sophisticated businesses. You know, these people in Eastern European countries, they go to office, they go to work every day. This is an actual business. They have team meetings, they have sales goals, and there is just an incredible build out of all different ways that people can get involved easily. They'll provide the software and things to hack in. So it's such a big business that the people's perception of it needs to change and realize that these are businesses and this is how they get their money. And people, this is a professional job.
Yeah, it's funny you say that, because we learned in the leaks that happened a few months ago that they even have HR departments.
Yes.
You know, it's so funny. So
To
go ahead.
piggyback on that too, when you do have a ransomware attack, they'll provide you with a number and you can call somebody and say it's from a foreign company. That person will speak very fluent English. They'll be able to coach you on how to make payment and do the whole thing at a very high, sophisticated, professional level, because they want their payment too. But they're essentially just they're like any other business out there. It's just what they're doing is unscrupulous.
So I recently saw an article or a claim that amounts of a breach or of an incident, the total cost can change based on reporting structure. You know, how many people there are in a reporting chain and how an organization is set up to flow. Is that something you guys assess, or is that not really part of your purview when you're looking at insuring a company and the risk that goes involved with, you know, CISO reporting to CFO versus reporting to CIO or CEO directly, you know, something along those lines?
You know, I guess not.
I'm not trying to stump you. I apologize.
Yeah,
It's an interesting thing I saw.
right. You know, there, in terms of the cost of the breach and how things can go way out of whack, there, you know, when it comes to like MFA and stuff like that, like within your email, so what do they call it? Like when the new 360 came out, there was the magic logs that were disabled by Microsoft. And so there was this one breach at a company where they got into their email and they have to sift through all the emails. And since the emails weren't being archived onto a server, you know, some companies, like one of the cyber companies that we work with, they have a 30-day deal. So every 30 days, anything that gets on there gets put on into an archive, so it can't be accessed directly. But when you have the entire, you know, all the emails, I think this is like a 70-person company, and they had to go through, I can't even remember the number of attachments. I think it was tens of thousands of attachments. Now your forensics costs have gone up way, way higher. Where if you have some of those things in place where you're limiting how much data is in a certain area, then that can happen. You know, that's one area that I kind of think speaks to a little bit, but in terms of a straight chain of command, it could depend. I could see it, but it's not something I've personally seen.
Yeah, I mean, this might not be answering your question, but as far as claim costs, and controlling the cost of the claim, it is definitely documented that having that incident response plan in place, so you do know the chain of what happens when something does occur, will lessen the amount of the claim. So the sooner someone is notified and you're working on it, the better chance that the claim is much smaller.
Okay.
Yeah, and that's
So it's
just
not the,
in your organization who is, who needs to be involved.
yeah, so it's not necessarily the reporting structure, it's just having a clearly defined reporting structure. So it's not who reports to who, but just making sure that it's defined that reporting happens and that notifications happen in a timely and concise manner, correct?
Yeah, I think that's exactly right.
Right. And with with that plan, it's so, because it's never going to happen at a convenient time. It's going to happen on a Saturday morning. It's going to happen to an employee. They're going to open something. And so then it's like, now what? It's on a Saturday. And so figuring out who do I go to next, then who gets involved from there, and there. Because how you handle that process can make or break you.
Mhm.
And it's very simple and it could go out of whack. There was a claim story about a hospital that they had lost a device while they were doing a triage, a mass casualty training event, and they had a computer that had all their hospital records on there. And when they were done with it, they realized that the computer was gone and it had been stolen. So they wanted to be proactive, and they went out and notified all of their patients that they ever had that they had this breach. Well, after a couple hours, they ended up finding the laptop within there. So now they've caused this mass panic, and they wanted to do the right thing, but it ended up hurting them a lot more in the end. So again, it's having that plan and making sure you're following it, because you think you're doing the right thing, you want to do the right thing, but it can absolutely hurt you.
Absolutely. Jake, you're kind of boots on the ground. What is the current state of cyber insurance right now from your perspective?
Oh, it's the market is crazy. In the last 2 years, it's been very, we kind of figured this was going to happen. Carriers were giving away this coverage. I mean, it was so cheap, and you could get a policy bound with basically nothing. And then the ransomware and the claims started happening, and the insurance companies just got absolutely wrecked. So now everyone's dialing it back and really focusing on these things, and people that may have not had these things in place now may not be getting their policies renewed, may not seeing huge increases in premium, 50, 100%. So I think the currents going forward, I think the cyber policy as it is now is going to change over time. I mean, there may be just a completely separate ransomware policy, but there's been more changes and more drastic changes in such a short time that I don't think has ever been seen before. Carriers are overwhelmed and brokers with getting submissions and working on accounts, and people trying to get coverage. It's not fun in that aspect, but it's an opportunity to be proactive and to get people in the right place. We have a letter that we send out 6 months, before our renewal or so, just giving kind of an update on the market and making sure, hey, do you have, let me see, I actually have that right here, the exact wording, so I didn't screw it up. So yeah, it's just multi-factor, including remote access, email access, privilege accounts, access backup to cloud storage, making sure that they have the encrypted air-gapped offline data backups. They're using a cloud provider, as long as there's a technical safeguard that mimics backups, being air-gapped offline that's suitable. Presence of endpoint detection and response tool on most endpoints, removal of local administrative rights from endpoints, no external facing remote desktop protocols ports. Internal is fine if protected appropriately, but visible RDP on the internet fully is usually an immediate decline. They rely on their own scans of the insured's networks to evaluate this. And so that's another thing, is once you get in with a carrier, they're going to do their own scans and assessments that are a little bit more internal, and they'll uncover a bunch of things. But I had a client, kind of go back, that had a breach, and it was, an employee that opened up an Excel document and, if you've ever seen that before, enable macros. And so it's like, sure, yeah, let's enable the macros. I don't know what that does, but let's do it. So as soon as they did that, it was able to get in the system and got into 2 of their 4 servers. And from there, they went through a huge overhaul and did all these things. But as we were getting down the line, getting close to renewal, because they were being non-renewed, their email provider did not have the ability to have MFA in place. And I almost didn't believe them. So I went online and looked at it and came across a forum on this specific company. And it was funny, these people were chiming in, hey, is there a multi-factor available? Our insurance company is requesting it and our agent is asking it, is this available? And down the line, it says not at this current time, but we hope to implement it. I mean, that was just last year. So again, then to kind of get onto that point, now it's getting kind of close to the renewal and they need to have these things in place. They want, sometimes they want things in there 60 days in advance to make sure that everything's running smoothly. So it's a lot of prep, a lot more, getting people up to snuff, because it's, most people aren't really familiar with a lot of this and they haven't had to deal with it before. And now they're being asked that they have to have all these things in there. And they're like, I don't know, my IT company handles it. It's like, well, you didn't ask for it. And so it's this kind of this back and forth that could be, it could be a lot. And, we get involved with the IT companies that try and make it be more of a partnership, that we're there to help and work with them, whereas they kind of see us as the person that's saying that their systems aren't strong and see us as a threat. And sometimes they can think that they're fine, they have everything in there, from a security standpoint. But that could be a little challenging sometimes, is working with their IT company as things come up. But it's definitely a crazy market, crazy time. But I think it's most important coverage, because it's one of those ones where you don't know when it's going to happen, how it's going to happen. Somebody could be in there, you don't know. And then, you got a property. Well, you know exactly how much that's going to cost you if a building burns down, roughly. With a cyber breach, it could be nothing. It could be millions of dollars, and it's just a big unknown. And so just the unknown factor of it sometimes isn't front of mind.
Okay, so we have a question. I think it's a great one in the Q&A. OS asks, when a claim is made, how does a carrier evaluate and determine if the claim should be paid out? And what is the impact if negligence was the cause?
Yeah, that's a really good question. And I'm not a claims adjuster, so I don't want to speak to coverages or anything like that. But the carrier, when they get the claim, they'll do a full analysis of what happened, how it happened. There aren't very many, exclusions, and just because an employee was negligent doesn't necessarily mean there won't be coverage. In fact, I think the claims we've seen were somewhat of a negligent act, and there was coverage. So that may be a misconception out there. But the adjuster will fully analyze the facts and look at the policy and determine coverage. The nice thing about the carriers from a cyber standpoint is they also provide guidance and expertise on how to navigate through it. And not only, whether there's coverage or not, but hopefully I answered the question. I haven't personally seen anything denied based on, we didn't have it properly backed up, or my employee clicked on a phishing email. I haven't seen anything that's denied those claims.
There's some, so with that, and then it gets kind of technical from an insurance standpoint, where it may not be covered under the cyber policy, but it could be covered under a different policy. One thing that may not be covered is bodily injury and property damage as a result, or if in a way that would happen. And sometimes you can get this coverage. So for an example, like if somebody were to hack into a hospital and change people's prescriptions amounts and dosing, and people end up dying, well, that would possibly not be covered because of how it is in there, and it could be excluded on the other policy. But you know, if you have somebody that's doing this is the kind of coverage that you'd want to have. There's also an exclusion for war and you know, foreign governments, which this is one that I've been kind of watching, since there are foreign governments out there that are doing these and these attacks, but I haven't really heard of anybody actually putting down the hammer on it. And then in the claim, you know, there, in terms of coverages and policies, things like that, the cyber one is, like Cindy said, I haven't really seen anything that hasn't been covered that should have been covered. You know, they're not going to pay for you to have upgrades in your systems. I mean, there may be an endorsement or something that helps do that, but it's, the insurance policy is not meant to put you in a better place than you were. What are some other things? You know, if
I think you're touching on it, Jake. I mean, how do you ensure maybe a company that's part of critical infrastructure is identified by the government? You know, there's 17 different industries that are identified as specifically critical infrastructure. Is your approach a little bit different than just say private?
So that's a really good point. And recently there was a insurance carrier out there that has an exclusion on there for widespread events, where, you know, if you look at the pipeline breach, people who were connected within there could be denied coverage under their policy. It's a relatively new exclusion that's on there, but looking at how you are connected to other companies and who you're working with and interconnections is also a huge concern, because especially if you have data on there where there's a payroll company or something like that, and it's like, well, hey, you know, we want to look at your cyber insurance policy, we want to be named as an additional insured, and that's not going to happen. So if, I guess what you could say is, if depending, you know, if it's a government or if it's critical infrastructure, yeah, we're gonna go about it in the same way, but we're gonna take some different paths, because there are certain things that, you know, are more important to focus on and be aware of. And again, the insurance company is going to be aware of that too, because they, you know, they have the information, the statistics on these types of companies and where things are happening. So it's kind of go about it the same. It seems like a much bigger concern. It's just a little bit different.
Sure. And I guess in the same kind of token too, what about regulatory concerns? I mean, you know, your European company might have to be responsible to GDPR, you know, if you handle payments, you're responsible to PCI DSS. If you're a healthcare company, you're responsible to HIPAA. You must be able to roll that into your consideration for that as well, correct?
Yes. And that's, you know, in California is changing. They're getting more on the European model. So again, it's knowing where you're doing business can change things. The notification protocols that the various governments have is absolutely something that is a focus, and it can kind of change things, but it doesn't, you know, like the PCI stuff, like if you had violated the PCI on there is a chance that you could have some coverage issues. Or for if you have a PCI, I should say that on the PCI side, if you get a fine or something like that, or an assessment, the insurance isn't going to pay for it.
Okay. We have a couple more questions in our Q&A I wanted to run by you. So given the current landscape, I see where this is going. So there's been a recent breach, or I should say legal action taken with a big company recently. So given the current landscape, how do current day CISOs ensure they are not potentially held liable and sought after in litigation personally? Can a policy include individual liability coverage to protect a company's CISO?
Cindy, what do you think on this? I mean, what did you see on the coverage side there?
For to protect the individual.
The individual CISO and not the company as a whole, but the
Yeah.
individual. This came up recently in a high profile news thing. I'm trying not to call them out by name, but
It's very
right
similar. It's
yeah.
very similar to Sarbanes-Oxley, just applied to cybersecurity, you know?
Mhm.
Yeah, I haven't seen anything on my end where or any of our clients or any of our policies where we've, you know, included individual coverage. I'm sure there is a way to do that
Mhm.
outside of the cyber policy possibly.
We just had another one come in that said, wouldn't error and omissions insurance cover the CISO?
It depends, because again, if the claim was related to electronic data or a data breach, again, that would be something that would have to be defined within that policy, because there may be, as there are with a lot of policies, strict exclusions for data breach and electronic data, which is how this whole policy came to light, because general liability policies, people were filing claims on their general liability policy because, you know, this is a business insurance, but that's meant for bodily injury and property damage, not electronic records. So, and then you kind of see this with directors and officers too, that coverage where you want to have the protection for somebody as an individual and as part of the company. Because yeah, in a situation like that, yeah, somebody could go after you personally and on the company side. If that's something that is a concern, I'd say there's probably carriers out there that are willing to add an endorsement, separate limits, probably identify those specific people. Oops. I don't know where that came from. Sorry.
It's okay.
No problem. Okay, so we have this seems like a quick question in the Q&A. Do insurance companies carry their own MDR providers? So do you guys secure yourselves by hiring third parties to help make sure you're safe and secure?
Yeah, well, I mean, we do as an agency, yes.
Yeah.
Yeah, we follow all the protocol at the highest level.
Okay.
And
Yeah.
insurance companies aren't going to be, you know, self-insuring. You know, they're going to be going through other vendors to insure them.
Okay. Hey, you bring up another great question I wanted to ask. What advice would you give to those companies looking to self-insure instead of obtaining cyber insurance? What are the risks that go along with that?
Well, you know, I had just read something about this recently, you know, like setting up a captive program where you're doing some self-insurance and there's an insurance component involved in there. But the problem with like a captive or self-insurance plan is those are meant to look at high frequency number of claims with low, you know, payout amounts as a way to control the cost. With cyber, they're going to be low frequency, but high dollar amounts. So setting aside a budget for that and being able to determine that, I think it would depend on the company, and it would probably have to be a very massive company to be able to self-insure that. I mean, you know, look at Target, they had $100 million policy. I would recommend not self-insuring it just because of how you have no idea how big the potential claim and impact is going to be. Whereas again, you know, if you have like a workers' comp deal and you want to do that through a captive program or an auto captive program, those are a little bit different because you have a general idea on what the maximum amount of a claim is going to be and sort of those trends where there's just so many unknowns with cyber. And I think that is I would not recommend anybody to self-insure because the break even point on there just doesn't really make sense. And I mean,
Okay.
you could do an excess policy or set a high retention deductible where coverage doesn't kick in till, you know, $1 million if you wanted it to go up that high, but really, I don't think it would make financial sense.
Okay, great advice. So let's say a company had cyber insurance and they either let it lapse for some reason, or maybe they had a big claim, they were found to be negligent, whatever the case may be, and their current insurance provider dropped them or was not going to reinsure them. And they wanted to work on reobtaining cyber insurance. What's the impact on having previously held insurance and then lost it and then trying to reobtain it? Does that affect any rates or the process or anything?
Yeah, it absolutely does. And I was just thinking about, you know, what you were saying about the self-insurance side. One of the biggest values that I see in the cyber insurance policy is you've had a claim, now what? You know, if you don't have cyber insurance, what are you going to do? You're going to call your business lawyer and say, hey, I got a ransomware for this. We had all this stuff go out it's all expose all our client data. Now what? And trying to navigate that claims process yourself, I think you want to put that in the hands of the court, have the insurance company quarterback that whole process. So that's really where I see the value there. But with the changes in the marketplace, yeah, you know, maybe a policy lapsed for non-payment of premium. They got non-renewed due to a claim, which is what we see. It's going to be on every single insurance application. Has coverage ever been denied, canceled for any reason, non-renewed? So that could impact that for sure, especially with how hard the market is and how tight underwriting is. And then it's just a matter of figuring out, you know, well, why did you get non-renewed? What was it? Some carriers out there are non-renewing policies strictly because of the industry, and they don't want to be taking on that risk anymore within a certain industry. And that's a pretty easy one to explain. It's just the company bit off more than they could chew. So for the first year, you know, you may see higher premiums, but it's a matter of getting yourself up to the point where you have the right controls and measures in place. You know, just like anything, you get punished on some of those things, but with the vastness of the market, I'd say that there's exceptions. It's not quite like, you know, with like auto claims where you have, you know, these 5 or 6 autos, all the companies are going to kind of view that the same way. You have this dollars paid, these dollars paid, these dollars paid. There's definitely a much more of a gray area with cyber, but because of how hard the market is, the insurance companies kind of make the rules and dictate the terms.
Yeah, I like to tell clients that good companies have claims. We're not going to avoid every claim out there. But when we can show the carrier that these things have been done and put in place and they've, you know, are doing everything correctly, it goes a long way. Versus they had a claim and, you know, previous to the claim, they really didn't do anything. So, I mean, we want to avoid claims, but if there is one, we also want to show the carrier that, hey, this is a solid insured with solid programs, a great risk management plan, and they had a claim, but, you know, they're doing what they need to do.
And sometimes, you know, to piggyback on that too, it can be very frustrating from my perspective on sometimes when, you know, a company has a claim, and it could be on anything, and then all of a sudden they get a non-renewal, and it's, you know, at that time, it's now they're more aware of it than ever. They were the ones that really felt that, and they're going to make the change, and you want to get off the business and you're just going to take that loss. It doesn't necessarily always, you know, make sense like that. So it can be frustrating when a company gets denied or they decline because they've had a big claim and they put all these things in place. And sometimes it matters, you know, your underwriter, the company, how they view things, because nothing's always the same. There's all people involved in that, and certain people will go a little bit further and can see through some of it.
Okay. One last question, we're getting close to time. Can you guys kind of discuss what the limitations of cyber insurance are?
In terms of coverages,
Yeah, well, in terms of what kind of acts or issues can have a claim made against them versus what are some things that may be out of scope for cyber insurance that you guys have seen come to you and you're like, that's not really eligible for a claim.
I think it would have to be the nature of it. If it's not going to be covered under a cyber policy, it's probably going to be picked up elsewhere.
Okay.
Is really what it comes down to. And then also thinking back to areas where there's another exclusion that has come out recently with just a few carriers for failure to provide updates, updating critical software.
Mhm.
And if there was a breach that was found because you did not have the new update or patch, there's a potential that you could have a claim denied. But again, that would have to be spelled out in the policy.
Okay.
So what's covered and what's not covered is pretty defined in there. And again, there's really not a whole lot of areas of exclusions for coverage. It mainly comes down to war, foreign governments, things that would be covered, or things that would be covered under a different policy.
Okay.
Yeah, it sounds like on your end of things, to be able to conduct both the risk assessment and then subsequently the insurance policy, it's very unique to each business. And it seems like a very large lift. What does that sort of life cycle look like? How quickly could a company, get cyber insurance if they were looking for cyber insurance?
I mean, I could get something for you right now. It's
I love that answer.
it's pretty easy to get in there. If it was a large company that for some reason didn't have it and they didn't have some of these things in place, yeah, it could take longer. There was some companies that if they didn't have Cindy, what was it? Was it the endpoint detection one that we were working on where they wanted the 60 days? I can't remember what the deal was with that.
Right, they at least want to know, they kind of give you a target date. I can't remember exactly which one it was, but yeah.
And again, it's gonna vary from carrier to carrier. Some people will just say flat out no, and some people say, well, we'll do it for this price. But for the most part, it's not hard to get cyber insurance. Unless there's something really goofy on there or what you're doing. It's relatively easy. And I mean, even not on some of our really small accounts where it's maybe 1, 2, 3 person operation. Again, they don't have necessarily a huge risk, but you can get coverage pretty easily through most standard markets.
Yeah,
You're not
I love that. As we're coming up on time, I want to say thank you, Jake, and thank you, Cindy. And thank you to the audience for joining us today. And if you need cyber insurance today, you call Jake Sheehan and Cindy Anderson at Twin City Group, and they will write you a policy, apparently.
Absolutely. Yeah, we'd be happy to do that. Feel free to share my contact information. I love questions. I could talk about insurance all day. That'll make you exhausted. Review policies, talk through things, scenarios. More than happy to do that as for you guys bringing us on the call and getting to talk about it today.
Absolutely. And what other insurance will you do? Pretty much everything?
Yep, everything. Personally, I love workers' comp, but auto, errors and emissions, professional liability, property, inland marine, cargo, employment practices liability, which is a hot issue right now. Directors and officers, a little bit changes there in the marketplace, but yeah, just about anything the company wants to insure, we can insure it.
That sounds great. Well, once again, I just want to say thank you, Jake, for joining us. Cindy, very much. You're such an expert on risk, and Chad, you're pretty good. Okay.
And thank you, Jake. Thank you, Cindy. We really appreciate you.
Thank you for having us.
Yep.
Yeah,
Thank you.
absolutely. Melissa, we're going to hand things back off to you. Okay.
Absolutely. Thank you so much, guys. And thank you again to everyone for joining us today for our risk webinar. We hope you enjoyed our discussion. Visit criticalstart.com for more information on our NDR and incident response services, and stay tuned for a follow-up email with a recording of today's webinar. Enjoy your weekend, everyone.
Thanks.
Thank
Thank
you.
you.
Bye.